You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-interesting, at least we hope so, Options Insider Radio Network. And that includes many great archive episodes of this fine program going back all the way 5+ years now of Volatility Views. It seems like just yesterday we sat down to do the first inaugural concepts of this show, and here we are 5 or so years later. Crazy, crazy how time flies when you're talking all things vol. You want to go back into those archives, check out some of those great articles, debates, interviews, discussions we've had on various volatility topics. Easiest place to do that, theoptionsinsider.com. Or, of course, hit us up, iTunes, TuneIn, Stitcher, your player, your podcast provider, your audio outlet of choice out there. It should be up there. Just search for Volatility Views, or if you want to get the full kit and caboodle, search for our network, Options Insider Radio Network. You get all 15 shows then, so we'll keep you informed and up to date on all the latest goings on in the world of options. Trust me. You'll get a lot with that 15 shows, but we think it's worth it because it's free. So I think you're going to like the price at least. And however you listen, including those of you who can join us live every Friday, noon Central, 1 p.m. Eastern, via Mixlr, MIXLR. Just grab that link once, save it, bookmark it, do whatever you want to do with it. That's the same link we use every time. So whenever our shows go live, you can grab that link and listen to us if you are indeed available and like to do so. And however you listen after the fact, via the app, via the live stream, whatever the case may be, make sure you hit us up with your questions, your comments. We do love to hear from you guys, despite what some of these guys say. I at least like to hear from you guys. All right, and joining me on the program today, starting off, I'm not sure where anybody is, so I can't really go by order of proximity. Let's just go by order of how they show up on my screen. So starting with the man who's all over the place, at least locally. We have the Greasy Meatball, Mr. Mark Sebastian, from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, welcome back to Volatility Views, sir.
Oh, it's good. It's what's Friday without a little Volatility Views? My hour of peace and calm with Longo and Rhodes.
Peace, calm, tranquility, and volatility. All things we have on this show until we get some heated debates going. Then it's not the peace and tranquility kind of goes out the window, but we still have some of the good volatility in there at least. And also joining us, I believe he's local today. I believe he's not beaming in from some part of the third world or some other parts of hitherto unknown at least, volatility mecca. We are joined by Mr. Russell Rhodes. I'm not sure what the heck his title is over there. He used to be an instructor at the CBOE, or Options Institute, then he was the head of education. Now I'm not sure what your title is over there. What is your title in the newly formed CBOE BATS entity, sir?
I don't know. I really don't know.
BMOC. That's what they call him the big. He's the BVGC, the big volatility guy on campus.
I like it. I'm going to get hats made up for that. I don't know. We haven't settled on that quite yet, but for now, I'm director of education.
You would think that you guys would be experts at settlement by now.
Now.
There you go. There you go. Let's. Of course, it was a big week in CBOE land. We'll get to all of that stuff in a little bit. But first, let's welcome on our guest. It's time for our Volatility Viewpoint.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, everybody, welcome to the Volatility Viewpoint. This is the portion of the show, of course, where we welcome on guests from throughout the world of volatility. That includes researchers, practitioners, academics, traders, all sorts of people, product creators, and proceed to pick their brains for the benefit of you, the listener. Today's guest has been on before, so he's a bit of a repeat offender. It's been a little while, though. We are now joined by David Hait, the founder of OptionMetrics. David, welcome back to the Volatility Views program.
Thanks, Mark. Good to be here.
And David, it hasn't been that long, actually. It's only been since November. I was thinking it was longer when we started this. So I think we can dispense with talking about your background, the space, and all that fun stuff. But that said, I'm sure we have had some new listeners between now and November. So why don't you go ahead and give our listeners a little bit of an overview of what the heck you guys do over there at OptionMetrics?
Sure. OptionMetrics is primarily a research firm. We provide analytics and data on the options markets in the U.S., Europe, and Asia. And our customers are mostly institutions and institutional investors, as well as academic researchers who are looking to do statistical work and research on how options move and how volatility moves.
There you go, nice and succinct. It's like you've done that once or twice. I like it. Well, David, we wanted to have you back because you guys have been doing some interesting research over there into all things volatility, including let's start off in a topic we like to talk about a lot here on this program, which is skew. Of course, it's an interesting topic. It's one we kind of debate a lot here on the show and what's going on with skew, what's happening with the put wing and the call wing, typically of SPX, but we look at a variety of other products as well. I know you guys have done some interesting research into that. I think the most recent was probably about a week or two ago when you're looking at how the skew was shaping up out there in SPX, and it seemed to catch your eye a little bit. So why don't you tell our listeners exactly what you guys found and why you thought it was so surprising?
I think what we found is surprising by its absence. What we're seeing is the skew is relatively calm. We're not seeing much of an increase of puts over calls in the volatility space for 30-day vols, and this seems to go against the conventional wisdom. You hear a lot of people saying, well, VIX is low, but there's bad things happening on the horizon. There's going to be crashes and disaster and apocalypse and all that. We're not seeing it reflected in the skews from a sentiment perspective.
So it's kind of you're commenting more on the absence of anything. Yeah, you're right. These are, shall we say, interesting times. Of course, we have a new regime in the White House. We have an extended, protracted, near-term bull market that was kicked off by election night, obviously, and continues. So we're seeing some interesting playouts as a result. And of course, whenever you have the markets getting this top heavy, we see new highs being set across the board. It seems like almost on a daily, if not weekly basis at this point. You would think, conventional wisdom does tell us that, you'd see some people flocking to the puts to get a little bit of the hedge action on. And as a result, we would see that skew index start to creep up. But we're not seeing that. I'm curious, you've been watching this data for quite some time. Why do you think? Do you think it really is just still there is broad faith in this bull market right now, or do you think there's some other factors at work? Because obviously we know skew is a couple of different moving parts. It's not just the puts, it's the calls, and they have to be kind of taken together as a whole to get that skew number.
I think that the short answer is that there seems to be a disconnect between the volatility we're hearing in the press and the volatility we're seeing in the market. Seems like a lot of people are volatile, but the market's not so much.
So would you then say that this president is a single-digit vol president? Sorry, that was a dig at my co-host.
One thing we feel very strongly about the VIX is that it's an interesting sentiment indicator. It tells what the market is thinking, but it doesn't necessarily do a great job about telling what's going to happen in the future. So just because the skew is not as high as we think it is does not mean that there could be bad things happening. It just means that the overall sentiment of the market feels that we're on a pretty even keel for the time being.
You know, you're right, because my cohort's joke there said that refers back to a comment made I think by one of our guests, or maybe related by one of our hosts through one of our guests, that Trump doesn't seem like a single VIX type president. And as we all know, that was the impression coming at least so far in the first month or so. He's actually had VIX touch single digits at one point. So it's kind of been the opposite a lot of people have expected, at least from a volatility standpoint. And of course, you mentioned this kind of earlier. It is a bit of a, shall we say, somewhat interesting volatility environment out there right now. We have this setup that we've kind of been analyzing a lot on recent shows where near-term volatility is, I think you can put it, realized volatility in particular, which is kind of where we kind of start all of our conversations, is I think you can charitably term it anemic. It has popped up a little bit of late. We're last couple of days moving a bit has helped. We were sitting there kind of not moving at all for a while. So the realized volatility was sub 6 for the better parts of recent sessions here. Now we're flirting with, I believe, about a 9 in the 30-day. Actually, no, still about almost a 7. 30-day implied is about 9, but 7 close to it in the 30-day realized. So still, we're seeing a dramatic lack, the last couple of sessions notwithstanding, a dramatic lack of realized volatility, yet we're seeing, of course, VIX Cash, as we're talking, right around 11.5, so a market premium there. And, of course, the VIX futures going out a few months, 1 month, 2 months and beyond, are pricing in a substantial premium to that realized volatility. Why do you think that is? And are you as maybe surprised or puzzled or concerned by this current volatility environment as everyone else seems to be?
Well, I'm more puzzled, but I think that volatility goes low when people don't know what's in the future. It's almost counterintuitive, right? If you're uncertain about what's the future and you can't make strong projections about it, then the VIX tends to be a little bit lower. It is true that the premium has widened a little bit in recent weeks. I'm not sure if that's an indication of anything. That does tend to be cyclical. But you're right, the historical vol is rather low, and it hasn't been this low since end of April, end of August, beginning of September of last year.
And are you amongst the people who are kind of out there people are scrambling to find reasons why we're seeing such anemic realized vol, yet we're seeing bids in the VIX futures? Are you out there, are you amongst the people who are ascribing this to quote-unquote Frexit? Or do you think some other concerns are driving this? Why do you think we're seeing such a marked disconnect between what the futures are pricing in from a vol perspective and what we're actually seeing in the marketplace right now?
Well, the futures always are upwardly sloping as you go out further, right? So I think that the way we interpret that is that there's sort of short-term. People aren't very excited about the short term, but they're rather uncertain about the long term. I think it's probably the best way to summarize it.
That's true. They always are a little upward sloping. Seems like a little bit more aggressive now than usual, particularly when you don't usually see this much of a disconnect where realized vol so kind of antiquated or so anemic, and yet the futures such a hardy vol outlook. But it is kind of interesting. Another topic we've been touching on a lot, and I'm sure you probably have some thoughts on this as well, is the correlation out there between SPX and VIX. I'm sure Russell's been crushing the numbers on this as well, so I mean he probably will have some thoughts on this as well. But in general, we get hit up a lot on this whenever people see, VIX and SPX moving in lockstep on any given day. That's when the floodgates open. People start reaching out to us. How can this possibly be happening? VIX is supposed to be negatively correlated to the SPX. We all know that correlation, that negative correlation, is a bit of a loose thing, and it tends to vary. I'm curious, have you been looking into this recently, and what are your thoughts on, it seems like of late that correlation has actually been trending a little bit more positive than a lot of people would hope, I think, with a product like that. And if you have any thoughts or any recent research on this over there at OptionMetrics.
We did some research about a month back, I think, or 2 months back on this. There's a few things that drive the VIX. Obviously, the correlation is a big component of it, as you mentioned, but there's also some lag effects as well. So it's going to be correlated not only with today's S&P, but the S&P of previous sessions, previous days. And the VIX, of course, itself is self-correlated. It has the tendency to revert back to a low level. So if the market didn't do anything, we would expect the VIX to slowly move down to a baseline. So when you see these little moves from day to day and little changes in the VIX and little changes in the S&P, sometimes they're in the right direction, sometimes they're in opposite directions. I don't think there's too much statistical significance there. I think you're still going to get a strong correlation on larger moves. And that's particularly going to be the case when the market goes down and the VIX goes up.
Yeah, that's one of the arguments I make, is that you're going to get that inverse correlation when you want it. And if anything, if somebody's thinking about using VIX as a portfolio diversifier and it's going up when the S&P is going up, you really would think that they wouldn't complain about that.
Yeah, and you're right. And I think this market, stop me if I'm telling tales outside of school, but, I think that this market, the last 3 months, is a case study on why VIX can be a much better hedge than using puts in SPY or straight up or regular equity puts, because we've moved up from when we printed 999. Russell, do you remember where the market was when we printed that 999 market? It was definitely lower than where we are right now. Let me pull this up. But since we printed that 999 VIX a few weeks back, I want to say
it was on the 1st, and we were about 22.
It was like February 3rd or something like that.
2289
right?
in the SPX out there.
Yeah, so that was February 3rd when we printed that, and yeah, we closed that day 2297, opened that day 2288. We're almost 100 points higher since then, and the VIX is higher. That is case in point on why this product works so well as a hedge in a bull market relative to something like straight up index puts.
Yeah, they maintain their they may, if the S&P 500 goes up 10% after you buy some SPX puts, you're going to have to roll yourself up and spend some more money. If we're already at a low volatility environment, and you've got an instrument that's still got some life left in it, odds are it's not as far out of the money as your SPX puts suddenly become.
Yeah,
on the call side.
Right. That's a big problem. McMillan describes it as there's this guy named Larry McMillan who knows a few things about options, almost as much as you, me, and Mark, Russell. And he describes it as the sticky strike phenomenon. And that is, dead on, that the strikes for VIX are far stickier than in regular index puts. Not that index puts don't have a great value, but I think you're seeing the case study for VIX right now over the last month.
Speaking of VIX, David, the last time you were on a few months back, you had some interesting research you were talking about. We talk a lot about VIX and the various elements of it, and some people talk about it as a predictor. You were saying the value of it lies not so much for you guys as a predictor, but really as a tool for hedging, kind of what they're referring to earlier there, that jump risk out there. Do you have any updates to that research? Is that something you guys are still looking at over there at OptionMetrics right now?
No, we're still looking at it. I think that one thing we're very interested in is the shorter-term options. I think that if we look close at how they behave, we're going to see the move movement in the short-term options and their implied vols is very different from the 30 days. And there tends to be this idea in the markets that jumps happen, whereas implied vol originally was theoretically based on the idea that there's this smooth volatility over time. So you're going to see that disconnect in pricing between the 1-week options and the 30-day options. And we think there's a lot of interesting information in there about, again, the sentiment idea. What do people really think is the possibility of something happening this week as opposed to over the next 30 days?
And speaking of research, you guys over there at OptionMetrics, you hold your big research conference. I believe you call it ORC, the Options Research Conference. I think you just had it a few months ago. Any interesting developments? I know you guys solicit papers from throughout the world of academia and practitioners talking about different aspects of trading, including volatility. I'm curious if there are any interesting takeaways, maybe any surprising research that you guys had unveiled at the conference last year.
The theme seems to be, and we're seeing a lot more of this every year, is that volatility can be a predictor of future equity characteristics, not just future equity risk, but also future equity return. It appears that sometimes volatilities are compensated by extra return. We don't see that so much in the VIX market and in the S&P. We see that in the individual stocks and the single names. And that's an active area of research. People are looking all over about is there some information leakage within the options markets? Is vol predicting some events that insiders know about, or is it predicting some events that smart people know about? And can that be used and capitalized on for an equity trading strategy? There's a lot of very interesting work in there. A lot of these research papers are posted on our website for perusal by anyone who's interested.
And since you're mentioning that site, if people are intrigued by the data coming out of your conference or some of the research we talked about here, or maybe some of the interesting stuff you guys have coming up over there in the realm of OptionMetrics, where should people go? What should they do?
Take a look at www.optionmetrics.com. That'll give you a little overview of the products and services we provide, and there's a very extensive research section of the site that covers all the academic papers, or at least the ones that we could find, that have used our data since 1999. Quite a good history there.
That's quite an extensive track record. And before we go, really quickly, you did mention the research. People can find it, of course, at OptionMetrics.com. And any teases you want to leave our audiences with? Any maybe hints of some interesting research you have coming up? You just touched on a little bit there. If there's anything else you want to leave us with, maybe some interesting areas you guys are starting to explore, or maybe some surprising thing you guys are working on, let us know now. The time is now. The floor is yours.
Well, I think that the thing that fascinates us is this idea of the predictive power of the VIX, just how much predictive power does it have. And the index itself, from what we've seen, again, seems to be more of a contemporaneous measure rather than future-looking. We'd like to expand that work and actually look at the futures, which gets back to your earlier question. What is the steep slope of the futures telling us, and see if we can't put some real quantitative numbers on that.
All right. Well, David, I appreciate you joining us today. We always like to have people come on with some interesting and recent research. You can check out David's research about Skew and about VIX and a bunch of other things over there, as well as all of the takeaways from that options research conference, and maybe even register for next year's conference, usually towards the end of the year, I believe, Q3, late Q3, early Q4 over there in New York. OptionMetrics.com to learn more. And meanwhile, for us, though, we're going to keep on rolling. It's time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review. Like the man said, this is the portion of the show where we break down what was moving, shaking this week, and indeed today, in the world of volatility. Today being a bit of a quiet one, at least so far. We are streaming this live and recording this a little bit after noon here, Central, on Friday the 3rd of March. So heading into the Ides, not quite there yet, but we're getting there. So beware of all sharp objects there. And as we are coming into the midway part of the show here, most of the major indices pretty much unched on the day. So after a couple of days of getting a little bit of vol back into the equation, a little bit of realized vol creeping back into the space. Today, yet another quiet one. So we'll see if the last few days were pretty much just a blip on the old radar, and if we're going to go back to kind of that volatility malaise that we were seeing for the better part of the first quarter here, or if we're going to see something else, we shall see. Of course, earnings season for the most part behind us, so a lot of the near-term drivers kind of behind us. We do have the Fed on the horizon. We'll get to some other near-term and future drivers in a little bit. Of course, VIX Cash, as we are recording right now, off nearly half a handle, right around 1140 or so, which I'll check, but that's not too... It's not too bad, actually. It's kind of flirting with my level. It's flirting between me and the greasy meatball. We'll see. It was looking good for Russell earlier in the week with his high vol prediction, and then of course Trump spoke and all that vol went away, and now we're left in the doldrums. So it's looking good for my prediction, but we'll see. We've still got about half an hour left. But before we get to that, let's turn to my cohorts now. Let's start with Mr. What did you say your title was? Big man on campus over there, aka head of education, Mr. Russell Rhodes from the Institute. A lot's been going on. We've been talking about this for a while here on the show. Realized vol versus what's being priced in the futures versus what we're seeing out there in the options, and of course the skew. So a lot to sink your teeth into. Correlation as well, positive and negative. What's been catching your eye this week?
Well, I felt so smart when we approached 13.
You did seem like you knocked it out of the park there for about a day or two.
I was feeling really good.
I've learned from bitter experience not to get excited until about halfway through showtime, because I know anything can happen.
Don't get excited now, because you never know what could happen.
That's true.
Although
VIX
right as we got
mistress.
started, apparently Yellen was saying indicates more of a chance for a rate hike, and the market could care less. I think the market is just it feels very comfortable. I'm thinking of Trump kind of like Jack Nicholson. He's the guy on the wall, and he's keeping us safe, and the numbers are just showing us that he's keeping us safe and that everything's going to be totally fine in the world. It's not going to be a volatile world anymore, and that's what VIX continues to show us. But on the other side of that, he can't control what's going on over in France. And I think the curve's going to remain fairly steep as long as the V stocks remain. The April V stocks futures remain at pretty high levels, and it's still like a 10-point premium relative to spot V stocks. And as we get closer and closer, I think there are going to be more people that are going to be willing to get long U.S. volatility and short Euro Stoxx 50 volatility one way or another. And I think that's gonna it's gonna be pulling our volatility higher. It's just too far out there right now. Talking about nothing showing up in skew. Well, skew is usually about the 30-day options. It'll be interesting to see what happens with skew when we start when the 30-day time frame starts to match up with the election cycle in France. Sorry.
Yeah, and there's a lot going on. Despite the low VIX, there's actually a lot going on with volatility. Starting with skew, I think that a close examination will show that, on Wednesday's wicked move, calls started to get bid. So we saw the VIX instead of having a huge sell-off on the heels of a 30-point rally. Normally you think, 1.5% rally, guys are going to step in, they're going to blast upside calls, and vol's going to tank. Well, we actually saw the opposite of that. There was actually people chasing upside calls, and I don't think it's our friend that short those 1x4s, but there was actually a chase for upside calls, and it drove VIX from being down almost $1 to basically near unchanged on the day by the end of the day on Wednesday. Then yesterday, down 14, and the VIX is down $1. Why? Well, now once people realized, okay, we had a big 30-point move, but it looks like it's one off and then back to low volatility. Little money got taken off the table, and a lot of vol got taken off the table. We're seeing a little bit of a continuation of that. The price action of S&P options is it's starting to act a little 1999-ish. And for those of you that aren't around, Mark, were you trading IBM in 1999?
No, I was trading SPX until I think the end of '99. Then I went out into Intel. So I was
okay.
there. I was in SPX for most of that year.
All right, so to the end of the 1999. So that period of time, and really the beginning of the year 2000 was when we saw the market rallying and volatility rally at the same time. More so in like the VXN, which is the NASDAQ 100 vol, but we actually saw VIX rally with the overall market. And that is because there was a lot of people chasing upside calls. Word of warning, that can be a little poppy, at least temporarily. But so we may be due for either a real correction or a time correction. But definitely some interesting price action, despite the fact that it looks like nothing happened this week.
You know, it's funny you would mention that specific period out in the SPX, because when I was looking at some of that data you were referring to earlier this week, where we saw that kind of near-term pop with them both moving in lockstep, that was my first thought as well, because that was my first exposure to what at the time everyone was telling me was a bit of an upside volatility crash. I had never seen that. I was still a pretty new trader at the time. And, you know, you think protracted rally, you think volatility is going to come off, and it does to a point. And then when everyone can't bear it anymore, maybe you start breaking into the strikes that the entire crowd is now short. Guess what? You have to chase and get those back. And so that's when volatility starts increasing to the upside. It's a rare phenomenon. You don't see upside volatility crashes very often, or spikes, but they do happen. And so it's kind of interesting. When I saw that little bit of a blip earlier this week, I had kind of the same thought, even though you don't really see it play out on an intraday or daily basis like that. Usually it's a longer time frame because these setups take a while to develop. They don't just happen overnight. But now we're seeing it happen almost on an intraday basis, which is strange. And I kind of had the same thought earlier this week as to what is driving these. Maybe we're in this kind of new regime now where we can see these setups happen intraday as opposed to taking weeks or months to set up as they used to in the crazy old days. Probably, I think pre at least the second or third SPX expansion. I don't know how many they were on at that point. Speaking of all things options, let's get to Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody, it's time for that portion of the show where Mr. Russell Rhodes, the Director of Education over there at All Things CBOE, he regales us with 20 to 28 minutes worth of in-depth options activity on the VIX Weekly Options. Mr. Rhodes, have at it, sir. The floor is yours.
This was one of the toughest weeks to come up with things to talk about.
I budgeted you 28 minutes, sir. Go for it.
Do I? Oh, my God. Well, I could spell weeklies over and over again and see how that works. But the closest thing I could come up with, I found an interesting calendar spread where somebody was buying some of the March 22nd, I think the 22 calls, and they sold a bunch of March 29th 15 calls. And they bought those way out of the money, nearer dated calls for 14 cents and sold the others for 79 cents for a 65 cent credit. And at first I thought it was a rolling transaction, but turns out it wasn't. But I mean, looking at the March 8th options right now, you know, it's just with low volatility. I think when we're in a low volatility environment like this, although we know logically that volatility is overpriced, even more so in a low volatility environment, you have people that are a little reluctant to get in front of being short volatility using weeklies. And if you don't have a catalyst, they're not necessarily looking to put positions on as well. So like looking at the March 8th options right now, across the whole group of them, we might have done 2,500 contracts today. There's a lot of open interest that I think has been hovering around. Same thing with the March 14th. It's just very, very light volume that goes right along with the very, the very quiet volatility market. So
Russell, I have a question for you. So I'm looking. You know, the French election is the 23rd. Yeah. They're going to list the April 26th weekly future either this week or next week. I believe it next week. So with where everything is pricing, all right, right now you've got the May future 1470 and the April future 1470 and the May future 1555. All right. They're going to list that April future, I think, at next Wednesday. Where is that future going to price, do you think? If you look, the April 12s are about the same price as the April 19s.
Yeah.
That's going to be a really interesting contract. And I think if I was a betting man, I think that weekly could rival that weekly future in terms of option contracts could rival like the November election contract that we saw. I think that could be one that if traders are willing to step in and trade it could get really active.
No, so. It will be interesting to see what happens when that one comes out. But what's really fascinating is the big, the one that's very elevated as far as VStocks goes are the April contracts, and those actually expire the week before the election. So I think they are taking in, they're starting to consider that the spot option, the index options on the Euro stocks are probably going to be rallying a bunch too, or just work their way higher into the election. So I'm surprised that that sort of mentality hasn't worked its way into the VIX options quite, or the VIX futures. Even the ones that expired this before.
Maybe it has. I mean, how much? I'm looking at 15 is a pretty decent premium. Although I think that I think that April future is likely to settle somewhere near where it is now, because I agree. You'll see VIX start to get a bid. I was looking at Brexit last week. I actually ripped off a bunch of your stuff from the blogs from your blogs last Friday, and put out a research letter on VIX. And one of the things I was looking at was Brexit. And we really started to see volatility start to really blip up about 2 weeks before the vote. So that would put it right around April 8th, 9th, 10th, when we could see volatility really start to move as it becomes, a major news cycle. So I'd look for, one of the interesting things is that the general premium dip we see right after non-farm payrolls, when we get that in April, that may turn out to be an excellent opportunity to go in and get long. At least I'm thinking this as a trader. That may be an excellent opportunity to get long the April contract via futures or maybe via calls.
When we were doing the first segment and talking about skew, I did play around with the live vol tool and look at skew out to mid to late April. It looks pretty normal right now. So I do think we have some room to move to the upside with April volatility, which is going to ruin my whole April is always the lowest month for implied volatility of all the months. This year is just going to trash that, I can tell.
But nothing's going to stop you from continuing to bid higher for volatility in the crystal ball. We'll get to that in a little bit, listeners. But first, let's get to the rest of the week here. And the week that still is from a mothership, the big VIX options perspective. Kind of a quiet day out there today, about 214,000 contracts having gone up so far, a little bit past the halfway mark here of the day. So probably going to be a little bit of a quiet end to the week. Overall, pretty mild volume week. Even still, though, we've had some robust weeks in the past, and all that is helping to get the ADV creeping back up, flirting with that 600,000 level again that it's been south of for some time, right around 589 right now. So it continues to creep up every week. Maybe not this week so much, but we'll see. But overall, getting a little bit closer to that healthy, robust 600,000 ADV level. Thursday, about 275. Wednesday, 492, Tuesday 455, and Monday 437. So everything pretty much south of the ADV this week. Overall, open interest about 2.7 to 1, calls over puts out there. Again, pretty normal range for VIX. Nothing really explosive in that number out there. Call me when it gets to like 5 or 6, and we can start talking about that. Looking at what's been lighting it up, the hot strikes out there in VIX land for this week. Puts not number one with a bullet this week. They got knocked down a little bit. Number one with a bullet this week, the aforementioned March 17s. Talked about those a lot lately. That's a very attractive strike for a lot of people. Number one with 343,000 contracts open, followed number two, the March 16. So number one, number two there, 340,000 contracts over there. Followed on the heels, only 73 contracts behind by our former number one, the March 12 puts, 340,000 contracts and change. Only a couple spots down from last week, and the only put still on our list this week. So puts have been very active of late, but the calls have also had a resurgence of volume to knock off a lot of the puts on our list and bump these much beloved March 12 puts down a little bit. Number 4, the Ape 20s, 317,000 contracts. Number 5, the March 20s, dropping off a little bit to about 260,000 contracts there. Number 6, the March 18s, 257,000. Number 7, the Ape 25s, 248,000. Number 8, the March 22s, getting a little more optimistic there, 246,000. Number 9, the March 23s, even more optimistic, 232,000. Number 10, rounding out our top 10 hot strikes here in VIX land, the March 15s, 219,000. You'll note yet again, notable by their absence, any sort of 30 strikes. So after we spent all this time debunking that and debating that on the show, whoever was trading those out there must have heard it, because they've stopped. No more love. I guess maybe this is the realm. We've always said, where is the level in VIX land where it starts to make the 30s just not attractive anymore? Apparently, it's cash shy of 12, even though the futures are markedly higher. This level apparently is where, this far and no farther, is where the 30s become less attractive. Overall, just a tick under 10 million contracts open, about 9.7, about 7.05 on the calls, and about 2.65 on the puts. Really quickly, we can't get out of this section. I know we like to talk earnings. Not a heck of a lot of earnings going on. Earnings season has been replaced by IPO season. Everyone and their mother is just obsessed with all things Snap. We got to talk about it a little bit here because everyone's writing in on us again today with this. By the way, Russell, you guys over there at the CBOE, you could have made my life so much easier yesterday if you put out that release on when you're going to list the options about an hour earlier. Everyone was hitting us up on the show. When they're going to list Snap options? When they're going to list Snap options? We kept saying sometime soon, but we have no idea. And then the release came out like literally minutes after the show finished yesterday. Of the guys are going to list them on the 10th, I believe, next Friday. So a week from today. So everyone out there who's asking us, hey, when can we list? When can we trade options on Snap? You'll get your chance in about a week. Who knows where it will be trading at a week. Right now, today, it continues to rally. Of course, yesterday, supposed to list at 17, opened at 24, got as high as 26, so it rallied about 50-odd% from where it was supposed to list. Today, up another 11%, nearly 3 handles, right around 27, close to 27 and a half out there. But our listeners, they're savvy folks. We asked you guys well before the IPO happened. We asked you guys, if Snap opens at 17 like it's expected, how would you price that 1 week straddle? We gave you between $1 and $2, between $2 and $3, between $3 and $4, and over $4. And the overwhelming majority, over 50%, all said over $4. So our listeners are pretty savvy. Even though that price is in nearly a 25% move, they were still loving themselves some Snap vol. Also, really quickly, let me hit on this before we get to some other segments. We asked you guys too, what would you rather do right now? Yesterday it closed at 24.5. We asked you if the options were available right now, what would you be doing out there? Would you buy a 1 month 24 put? Would you buy a 1 month 25 call? Would you stay the heck out of it, or would you rather sell premium? Mr. Rhodes, since you guys put out the notice about Snap listing, you get to go first. What do you think is winning our poll here on what would people do with Snap options if they were trading right now?
Sell premium.
Interesting.
That would be my guess. No, that'd be my guess. I think our listeners are smart. And you've got, go out there and take a look at real companies that have been around for some time that have a market cap of 30 billion and compare them to Snapchat.
A little bit different beast.
You know what I mean? So you got to assume that there's a little bit of exuberance floating around with the stock, and that would probably work its way over to the options as well. Don't you think?
Well, I think there's going to be some craziness when the options list. There is all sorts of things wrong with how they IPO'd in terms of conventional IPOs. There's almost no stock. The lockup for, I think, all the underwriters and stuff like that is a year. The employees lock up, some of them are even longer than that. So there is a ridiculous amount of scarcity in the stock. So there's literally no way to short the stock. So the only way this stock is going to go down is if somebody who released, one of the people who got a tiny bit of this stock, a little bit of this market cap, decides to sell. there's no stock for sale, and enough people that want to buy it to run the stock higher. This is going to be, for the next year, I think, a crazy conversion reversal name. In other words, there's going to be lots of people trying to convert, which is when you convert, you buy physical stock and sell a synthetic. Selling a synthetic basically means buying a put and selling a call, a combo, versus long the underlying equity. So there's going to be a ridiculous amount of people that want to get short and have to do it in the conversion reversal market. I think the negative borrow on this thing could be triple digits, and this will bring new meaning to the words Shorty McSqueezenstein. And you are going to be talking about something that I think is going to go up and up and up and up until there's a major release of stock. And once there is, this thing is going to get slammed. I don't know if you, Mark, you want me to talk fundamentals on this thing, but I from a mechanical standpoint, everything in this name is that everything about the way they designed this IPO was designed to jack the stock price higher.
What a surprise that an IPO would be designed to support some sort of artificial valuation on behalf of the VCs and then the underwriters therein. We've done that many times before, debunked the IPO process. I know Mr. Rhodes has to hop off a little bit early, so I don't think we have time to do that again today. We'll save that for another day. Meanwhile, we'll keep on rolling into your segment. It's time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the OptionsInsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility Voicemail. This is indeed the portion of the program where we break down all your questions and comments and insights. Let's kick things off, paying off our question from last week. We had a bunch of, you guys are all over all the various snap polls we put up this week. If you haven't voted in those yet, I think one of them already expired. One's going out in a little bit. Head up at Options on Twitter. I think by the time you listen to the podcast, probably will be too late, but those of you tuning in live, there you go. That's your bonus for tuning in live at Options on Twitter to make your voice heard. Our question last week, which has already come in, we asked you guys, hey, VIX has already hit single digits under Mr. Trump. How low will it get during the rest of his term? And our audience was pretty much split across the board. This is the most evenly split I've ever seen them. We said, gave you the choices of it won't break 10 again, between 9 and 10, between 8 and 9, and below 8, and pretty much almost 25% across the board. A slight edge to it won't break 10 again with 29%, followed by 27% for below 10. So go figure. And then a tie for 22% with between 9 and 10 and between 8 and 9. So everyone is all over the place when it comes to how low will it go for VIX. And Mr. Rhodes, a.k.a. Dr. VIX, I've been calling you that for a while. I took credit for that, and one of our listeners took umbrage on me for taking credit for that. This comes from Hawkeye. He's written it a bunch. I think he's actually been to one of your events, Mr. Greasy Meatball. So I think he's met us. And he writes in to say, I call major umbrage on me for me taking credit for his idea of calling Russell Dr. VIX, and he included an attachment in his email. He says, as you can see in the forwarded email below, I have it in writing that I proposed that moniker for the good doctor back on November 17th, 2015. You should feel ashamed, in caps, of yourself in your weak attempt to take credit for my idea, especially, also in caps, since I sat right next to you and Uncle Mike at the Lobster and Meatball Fest in Chicago a couple of years ago, eating tasty steaks on Sebastian's dime. I do recall that. He was a nice gentleman, so I do apologize for giving him umbrage. He goes on, have you no shame, sir? Is your memory that short? Umbrage, I hereby give you permission to send the residual checks to my PayPal account. And then he has a few other ideas. He also asked us if we could get the Viceroy back on. I'm okay with that. And also he wants to get the Typhon guys back on. He was fans of those guys as well. He'd love to see Don S on for a mega reunion show as well. We'll see if we can make that happen in the future. And he concludes with some nice words. He says, keep up the great work, Mr. Hawkeye. So I do apologize, Mr. Hawkeye, for purloining your idea. You do have the written proof. I thought maybe I was using it around that same time too, but if you take umbrage, I might have to go back and check. I don't know. As the Dr. VIX, do you recall who first christened you with that, sir?
I am totally staying out of this one. I think it's one of those things that just evolved. It's like one of those comets that 3 people in their backyard found at the same time.
I think I heard you
go around.
I think I heard you say I give you credit for all naming and also all rights to the name going forward. So all residuals should accrete to me. Is that what you said?
Exactly.
I like it.
Somebody already owns the website www.drvix.com.
I'm sure they do. Every permutation of everything options and VIX has been gone for many, many years. But Doc,
I was thinking of the dawn of VIX.
I'm kind of curious. I'm maybe a little scared to see what that website has. Maybe we shouldn't. Who knows what's on some of these sites? But there you go, listeners. If I steal your ideas, feel free to give me umbrage live here on the show. All right, and here's one for you, Mr. Meatball. This comes from Kmar65. He says, must be from the South, have you all covered the situation with Catalyst and HFXAX fund recently? I tried to get all the webcasts, but I must have missed it. If you had, expected max drawdown was 5%, and they blew through that. Gives one cause for pause. RE option strategies would be great to understand how it happened and how it could have or should have been avoided. Thanks in advance. You and I went into some depth on this last week, Mr. Meatball. Apparently our friend Kmar must not listen to all of them because he obviously missed those. We did it on 2 episodes, I believe. But for our friend Kmar, obviously these are, I believe it was 1x3, maybe 1x4 that they were long 1, short 4 out there in the SPX. But for the benefit of our friend Kmar, as well as anyone else who may have missed that, why don't you detail your diatribe on these Catalyst folks for us, and what exactly happened?
I mean, all right. Well, I'm not going to give the extra long discussion because
we don't have time.
We went in for half an hour, but basically what happened was these guys were long 1 option, kind of near the money, and short 3 or 4 options out of the money, further out of the money for a credit, which works really well if the market drops, if the market sits, or if the market slowly rallies. However, if it rallies quickly and you don't hedge, you end up running into what we call a lot of short gamma. And that's what happened to this guy, and they got worked by a rallying market. Hopefully they did not run into another buzzsaw on Wednesday, but because maybe that would be why the VIX was acting a little funny, but I don't think so. So they had those guys really screwed the pooch on that trade. All they needed to do was buy some futures on the way up, and they would have been fine. But apparently that's beyond them.
Why would they have that level of savvy? They're just putting on a massive multi-million-dollar option position. Why should they have any knowledge of how to delta hedge it or adjust it? We talked about this last week as well. This is the kind of position, whenever you have any naked short legs, let alone to the ratio extreme that these guys had, 1x3, 1x4, depending on how you look at it and what time they had the position on. Anyone who has even an ounce of options wherewithal would know that's a position you can't set and forget. You got to babysit it. Otherwise, it's not going to work out for you. And yet that does not seem to be what these guys did. They allowed it to come against them. And once the crowd, once the traders, once the customers know what you have on, let alone for that size, they're going to lean against you. And that's what happened. So that kind of exacerbated the impact of it. And it was a bad scenario for them all around. I wouldn't allow this to quote unquote give you pause about option strategies. This is just a poorly executed option strategy. The strategy in and of itself, in the right circumstances, executed the right way, is sound. But this should not be a reason to make you not want to trade or call or put ever again. I would not get that from it at all. If you want to get an in-depth of this, by the way, go back, check out last week's option block and also last week's volatility views, where we went into this in a lot more detail, and that'll explain it. But yeah, don't let this give you pause. This is just, if anything, it should be informative to you about how not to trade. That's also a worthwhile thing. All right, let's keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the Crystal Ball. As the name implies, this is the portion of the show. This is the most dangerous, the most reckless, sometimes the most embarrassing portion of the show. It's where we attempt to decipher what the volatility gods hold in store for the coming week. As we are doing it right now, it was earlier in the week. Russell, of course, our degenerate premium buyer here on the show, always has to buy VIX and does it aggressively. Our friend here, not looking too good. Well, actually, say he was looking very good earlier in the week with his guess of 12.34. As the week has gone on, not so much. Like I said, we kind of off those highs. We were trading around 11.5 in the VIX Cash. Mr. Meatball was at 11.5, so it was looking better for him. I was around 11.25, which right now looks like, and let me know if you guys confirm this, looks like 11.31. So it looks like that would make me the winner. Do you guys concur with that, or you guys don't take umbrage? I'll take from your resounding silence that you.
It's like I had an answer and I didn't hit the button quick enough on Jeopardy.
It's like you got.
I was because I'm a persistent muter here. You win.
There we go.
You seem to take it more seriously than the rest of us. So
nice. Yeah, there we go. spend weeks and weeks analyzing the charts. I get all of 8 seconds on this show to do my analysis. That means I get to go first, or I get to choose one of you guys. I like to go first though, because otherwise, if I let you guys go first, and you step all over my picks, and it gets too crowded. So yeah, I could feel what you were selling last week, Russell, with wanting to buy VIX. Certainly, the market was pricing in more volatility going forward. We talked about how the VIX futures still have this market premium to them. Someone's expecting something to happen, whether it's Frexit or the Fed, or pick your poison there, something. But again, this is for predicting it this time next week, so the 10th. Also the day snap options list. Who knows? Maybe that'll cause some interesting injection of volatility into the marketplace. I was a little concerned earlier this week when we were flirting with the upside, but I kind of like these levels where we are right now. Maybe a little bit higher than where we are right now. So I'm going to move my pick up. I was 11.25 last week. I'm going to go back up to 11.55 for next week. Get off of the round number. So the next closest was Mr. Meatball. You get to go next, sir. What are you feeling?
Let's see. What did you 11.5?
I picked 11.55.
You did? All right. I'm going to do 11 then.
Switching places this week. Interesting. We'll see how that works out. 11 even. And Mr. Rhodes, our degenerate buyer of all things VIX, take us home, sir. What are you feeling?
Is this Price is Right rules? I've forgotten.
Closest without going. No, it's closest period. We don't go without going over. If you go over, you can still win.
I was so going to step on 11.01.
Yeah, that would not do it for you.
No, that would not do it. I'm going to go 12 even.
Wow, a tight range.
Do you want to know the logic? Because there is.
Go for the logic, sir.
The logic is next Friday is the week before the Fed.
Mm. Friday is always the week before something out here, and I've learned that not sometimes.
Friday next week is a late employment number.
Yeah, it is. So things will implode.
There you go. So
there you go. I love how the same number gives you both the different ends of the spectrum, 1 to 11, 1 to 12. I love it. See, that's what's fun about statistics, and numbers. Everyone can interpret them in all sorts of fun ways. Unfortunately, you can't interpret that music as anything else other than we have come to the end of another epic sojourn through the world of volatility. I, of course, want to thank our guest, David Hait from OptionMetrics. Check him out and his team's research over there at OptionMetrics.com. And before we go and check back in with my cohorts, my partners in crime, let's start with you, Mr. Greasy Meatball. What is cooking in the land of all things Carmen Line and indeed OptionPit?
We are OptionPit. We've got our Butterfly Intensive coming up in a couple of weeks on the 11th. You can go to OptionPit.com/events to check it out. And aside from that, Carmen Line, we are continuing to exist as a fund, which is a win.
I suppose that is a win in this environment. And Mr. Rhodes, I know we have a big event coming up next week. You and I will be heading out to the CBOE Risk Management Conference. If you want to give us a quick preview of that, as well as you guys are always talking about new features. You're taking credit for a lot of those new features, but you guys are always rolling out new features over there at CBOE Live Vol. So if anything new is coming down the pike, let us know now, sir.
You know what? I'll let you know next week because I'm going to get to spend some time with the Live Vol folks while we're out at Risk Management. So I'm gonna push that one out a little bit. But as you mentioned, we got a big event next week. You're coming along too. We actually had a little talk about you. Were your ears burning this morning as we talked about
my ears are always burning. Someone's always slinging me shade somewhere.
You are a hot topic of conversation among many people.
Should be fun.
At the coffee shop this morning.
We can't let that guy into our event.
No, they were excited that you're going to make it to the California version. They really were. I'm not.
Oh, that's nice.
This is my first time checking out the California event, so I will hold it to the same high standard as I hold the Florida event. We shall see.
Awesome sauce.
Oh, I love the California event is way better than the Florida event.
I've never been, so we shall find out.
Yeah, you're going to like it.
We shall find out forthwith. You guys can check it out over there. Just search for CBOE RMC if you want to learn more. If you're going to be in the California area, Dana Point out there is where it's being held, I believe. And you want to swing by, it's an interesting event, kind of a different type of audience than your typical industry type event, more practitioners, which is kind of fun. A lot of researchers as well. So if you like what we talk about on this show, I'm guessing you do because you listen to it, then that conference is right up your alley. And of course, always check out our friends over there at Live Vol. In fact, check out their data shop. People are always asking us, how can I get data about X or Y or Z? Go to datashop.cbo.com and you can find whatever bespoke data set you need over there. And on behalf of Mr. Rhodes and our guests, David and Mark, and indeed myself, I want to thank all of you out there for listening. Stay tuned for TWIFO. We're coming back in about 28 minutes for TWIFO, so don't go anywhere. And we'll, of course, see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.